Good morning, everybody. We're just going to let people register or start filling up, and we'll get started in just a moment with our webinar. Just give it another minute here to get people at their computers, and we'll get started with our webinar. Okay, I'm going to go ahead and get started, and people will continue to sign on as we move forward. Welcome to the Orange County IDA's webinar focused on business recovery from the shutdown. I'm Nancy Proyact. I'm president of the Orange County Citizens Foundation, one of the IDA's partner organizations. Much of the IDA staff is in training today, so I've been recruited to introduce today's program and moderate our Q&A. This is the 11th in a series of webinars sponsored by the Orange County IDA to help Orange County businesses cope with COVID-19. Each session has covered a variety of business topics, from the payroll protection program to re-envisioning your business in the new normal and opening procedures as our economy starts up again after the New York On Pause program. Today, we're going to focus on financial management to help your business recover from the pandemic and then remain strong as we continue to see changes in our marketplace due to COVID-19 and other business factors. Please remember that you can ask questions through the dialog box on your screen, and we'll address those either during the presentation or at the end of our speaker's presentation. We'll answer as many as we can today, and we'll follow up with others directly after the webinar. Now on to today's speaker. Ann Bouchard is a certified business advisor at the Mid-Hudson Small Business Development Center. Throughout her career, she has helped hundreds of organizations in various business stages, combining strategy, methodology, and forward thinking, addressing the minutiae of day-to-day operations while keeping in mind the end goal. She uses a lifetime of experience in her advising work, whether it's reviewing a profit and loss statement to help with cash flow issues or discussing marketing and pricing strategies to increase revenues. We're pleased she could join us today. And Miriam, I'll turn the program over to you.
Good morning, everyone. Thank you for attending. I think you're giving yourself, you're going to be learning great tools this morning. I want to give you a little introduction about the Small Business Development Center. It is a nationwide program with funds by the federal government. The SBA funds our program, and we also get state funding. In New York, there are 22 centers, and our center in the Mid-Hudson has, I think, like 6 or 7 satellite offices in different counties with as many advisors. So we really try to reach everyone regionally. We're very, it's a big area, but if you look at our website, which I think you can see on your screen now, you will find the nearest center to you. One thing that's particular to the New York SBDC network is that we advisors have access to business librarians that can do research for us in any shape, fashion, and form. So for example, if I have a client that wants a very specific industry data, that would come from a database that neither them or I can afford on my own, but our librarians have access to all this data. So I aggregate the information from my client and all their questions, and then I send that to the librarians who do research for us at no cost, and then I get back usually a very hefty folder with all kinds of files in it that I can forward to my client. So we have, this is unique to New York, not all states have that. In addition, all our of our advisors were entrepreneurs at one point, so we understand what it's like to be in your shoes. And collectively, we have almost many decades of experience as advisors, and we pull on each other's experiences when we come to an industry or a question we're less familiar with. So there are about 200 advisors statewide, and we constantly are networking with questions that we need answers to. So it's a great, great organization, lots of depth, lots of breadth of knowledge. So I encourage you, as you can see, it's no cost to you, to reach out if you are thinking that you might need assistance. So with no further ado, let me introduce myself. I've been an advisor for almost 20 years. This is my fourth or fifth disaster. The difference between this one and the others is that there is somewhat of a beginning, but we don't know when the end is going to be. At 9/11, it was a date after that was, finite, after the floods of Sandy, Irene, and Lee, that lasted a few days to a few weeks. Again, there was an end in sight. We don't know when this is going to completely be done with. So that's the number one. And the number two thing that's very different is that it's not focused on one geographic area. It's pretty much all industries everywhere. So because of those two variables, it's super, super important that regardless of the size of your business, regardless of what you do, that you are in touch with the financial aspect of your business. So many of you probably just look at your financial statements once a year when you get your taxes, and you go, okay, well, that's great. Not understanding really the story that these numbers give you. Some of you might be getting a monthly or quarterly report from your bookkeeper or your accountant, and again, look at it, but don't really understand how to use these numbers with your decision making and your strategy and your marketing. So what I'm hoping today is that you can become friends with your numbers. And that's what we're going to do. If you're on the phone listening, this will be hard for you to follow. And if you are watching this on your phone, it's going to be also a little bit difficult to follow because it's going to be really small. So at this point, you should be seeing my screen, which would, with a pro forma, a spreadsheet from Google Doc that says sample cash flow. If you don't see it, raise your hand and let us know, but this is what you should be seeing. I prepared this example with two things in mind. It's a restaurant, so everyone understands that business model. And the second thing is it has cost of goods. So if you have a retail store or you sell things, this will apply. But if you are a service industry, it will not. But that only means that you'll have less lines in your spreadsheet. So at the bottom of the screen, you will see a Payroll Master, a Food Master, amortization table. We'll get to these later. The first thing I want to see when I start a spreadsheet is operating costs. I want to know, what are your fixed costs every month? And you usually know what these are intuitively or approximately because you pay the bills. But if somebody else is taking care of your bills, you may not see the minutia of all of your expenses. So it's really important that you know what these are. First thing is your owner's compensation. The reason it's there, you may be on payroll, but I put it there as a first line item, is that if you're not getting compensated with your business, you're not breaking even, okay? Breaking even means that this business supports you and all of the business expenses. So I'm putting this here because in this example, our owner draws about $3,500 a month, which is not a lot, but that's what I'm putting here as an example, okay? You need an accountant, even if for your year-end taxes. This example is a corporation, so it costs about $1,000 to $1,200 a year. And even though it's a one-time fee usually, or a quarterly fee, I'm putting it as a monthly fee because it's something you should budget, so that when you have to spend your $1,200 comes tax season, you're not going, oh my God, where is this coming from? Because it's already allocated in your budget. Now you realize I'm saying this with the thought that you're all doing best practices, which I understand most, if not anyone does, but best practices would be that you set aside an amount every month for those large expenses, which includes insurances and things like that. All right, advertising, marketing. So when things get tight, the first thing people do usually is cut off marketing, which to me, I understand the rationale, but if you think it through, when you need more sales, you don't want to cut marketing. When you need more sales, you want to increase your marketing or do smarter marketing or do different marketing, but you don't want to eliminate your marketing line item, if at all. Bookkeeping. My line is do what you do best, delegate the rest. So, for example, I could learn how to change the oil of my car. It's not very complicated, but I choose not to because the reality is when my mechanic looks at my car and changes the oil, he also does a mini inspection of all kinds of things. And he also, makes sure that the tires are good and the brakes are good. He does a mini inspection. He replaces the fluids of all kinds, and that's his expertise. I would not do that. So your bookkeeper will do all kinds of things better than you would ever, because that's that person's expertise. They will remind you, sales tax is coming up. They will remind you, you have to pay this, you have to pay that. So you have to set this aside. They understand what's under the hood better than you would. So I always encourage you to get a bookkeeper. So in this instance, it's a very small restaurant. So that person only comes for 2-3 hours a month, takes care of everything. And so it's only $150 a month. Insurances. This is something that you usually get when you start and never think about it twice. It's really important to do a yearly audit of your insurances. You call your broker and you say, okay, I want you to look at my liability insurance, workers' comp, disability. If you have vehicles, you can include those and say, am I getting the best coverage for the price? Because things change. The quote you were given when you started, it is probably different now 3, 5, 10 years later. So make sure that you do a quick audit of your insurance. So this particular restaurant has a liquor license. So it's about $3,000 a year. Again, it's usually you're not on budget, but you could. Some insurance companies allow you to do that. But if you're not on a monthly payment with your insurance, it's going to be a big chunk of change to come up with one day. So again, plan it, put it in your set it aside in a little escrow savings account so that every month you just set aside a certain amount. Office supplies, in this instance, it's just an ink cartridge here and there and another, so it's not much. And I'll get back to payroll in a minute. Repairs, maintenance is your hood that needs fixing or whatever else. So it's good to have an allowance in there. And if you don't need it, that's great. But if you do need it, then you know you have money set aside. So this is a small restaurant, but it's in a popular area. So their monthly rent is, $4,000 a month. Supplies, this is not supplies as it relates to your food making or takeout. This is cleaning supplies and things like that. So I'll put an allowance for that. And then same thing with telephone, internet. All right, travel expenses, just follow the IRS guidelines of how much you can use as an allowance per mile. It changes every year. And I'll put here a small allowance because, you know, that person's going to the bank or does some errands and keeps track. So utilities is about $650, and you have a website hosting and all that. So before this person's business has ever spent a dime on buying food and whatnot, they have a monthly expense before payroll of almost $10,000. So it goes really fast, and it's important to know what these numbers are. So now let's go to the Payroll Master. The Payroll Master is a place where you can figure out what your costs are for payroll. You know what these are, but it's sometimes good to set it up in a spreadsheet so that you can have a clear view of what you're looking at. So in this instance, that restaurant is closed on Mondays and Tuesdays. And I put there the hours of operation, both for the restaurant and then the real amount of hours that our chef, sous chef, wait staff, and busboy, girl, dishwashers are working. So there's only one chef, but there's 2 wait staff. These are the hourly wages. This is how many hours they work per week. And the total per month is this much gross, okay? Bold is the master, meaning I'm going to bring that amount into my spreadsheet so that if I change things, let's say, rather than having one sous chef that works 40 hours a week, I have now 2 sous chefs that each work 25 hours a week because I needed a little more prep time. Well, things will change here, and I will use that master to make the allowances here. So we have now payroll taxes, which is about 20%. That's accounted for your payroll. So now we're at 25,000 a month. It goes really fast. We need income. With this, I go to now my food master or income master, which is basically what we're now in June. Okay, so I figure how many weekend days, how many weekday days per month for each month of January and February. And then things started to change in March because I was told that my business needed to close due to the pandemic. And then nothing in April, nothing in May. And then I'm just starting in June with my outdoors seating in phase 3. And the numbers are very different. So what I had previously was 50 patrons a day in January when it was slow, and then 35 during the weekdays. And each of these folks would spend $15 on food and about $8 on a beverage or drink or whatever. So these are basically my real numbers for January, February, March, April, May. And my June through December are my projected numbers. But I'm going to put this in here for now, which is going to get this info here. And if you don't know how to use Excel or Google Sheets, and you're looking to reproduce something like this or make up your own, and you're like, how did she do, how did she do the formula? How did she Google it? How do you do blah, blah? Google it. You'll get an answer, you'll get a video, that's how I learned many years ago, but that's when I'm looking to do something a little more different than what I usually do. That's how I found out how to do it. So Another thing that I also pre-programmed is my cost of goods. So cost of goods are variable. What that means is that unlike my operating expenses, which are fixed no matter what, whether I'm open or not, my operating expenses are there. But my cost of goods will vary depending on how many customers I serve. And so the more people I give food to, the more my food costs will go up. And the less I serve, the less my food costs will be. So they vary. So it's really important to have a handle on your cost of goods. So if you're selling widgets, you're buying them for $5 and you're selling them for 10, then your cost of good is 50%. A lot of people do not take into consideration all kinds of soft costs like freight and shipping, the costs that are included in getting the goods. They put this into fixed costs, and that's a mistake. So make sure that you aggregate your cost of goods so that they are completely related to your income. I hope this makes sense. Beverage alcohol, so if you sell a drink for 10, usually costs about $1.50, so that's why it's 15%. And then right now, I'm assuming that very little people are using cash. So this business incurs a 3% swipe fee every time their patrons pay with a credit card. And in this instance, we're assuming that 85% of the patrons are paying with a credit card. So when everything is said and done, what we have is a total income, right, every month, minus total cost of goods, right? And that gives you a gross profit. Then with what's left in the bank account, you take your gross profit and you remove your operating costs and you get a net profit or loss before taxes. So in this instance, January and February are already slow months. And, you know, January, February, March is usually a time where that business would lose some money. But it really got bad in April and May. Now, April and May, it just so happened also that they have laid off their people because nobody was working. So I'm going to take that expense off, right? They closed, they sent everybody home. But everything else stayed the same. So it's basically just diminishing a little bit the expenses. So what does this do? When we go down, we scroll down to the bottom line. You're the bottom line. So this is the bottom line. All right, so I'm going to assume that comes December, they had about $30,000 in their bank account to help them float through March. Okay. What that means is that, you know, your numbers are not going to be great in January, February, March because it's winter and the weather, and a lot of people don't come because you don't have, you know, you just, people don't go out as much during those months anyhow. So you have to have some cash in your bank account to help you deal with the losses of January, February, March. So in this instance, let me just make an assumption. So actually we need more than that. We need 40,000, right? So having been in business a few years already, that person knows they need to put in the bank account at least 40,000 by the end of the year so they can float through the winter until the numbers pick up in the spring. So now they lost, you know, 11,495, but they had 40,000 to begin with. So what's left in the bank account is 28,000. Then February, the numbers picked up a little better, and then they lost only 5,000, which is normal as a restaurant. So now their cash in bank is 23,000. March, they had to cut early in the middle of March, the third week, I forget. And so they lost a little more. So now they have 8,000 in the bank account. But that's where things get dangerous, because now we have a negative, right? We have a negative. So not knowing how long it would last, initially that owner, having some savings, decided, says, well, or borrowed from friends, family, I'm going to put 20,000 in my own bank account, to float. But being wise, this business owner made projections and said, oh geez, you know, if I don't open up in June at full capacity, I'm gonna run out of money. I'm just not gonna make my numbers. So they applied for the EIDL, and because they had more than 10 employees, they received the advance that gave them 10,000, which was great. That gave them a little more cash flow, but looking at the projections, they're like, geez, I'm still going to be short. I don't know how my projections are even good. So they applied for the PPP, which they just received at the beginning of June, which worked out perfect because that's when they could reopen. And they received basically 2.5 months of payroll. So for simplicity, I'm just going to put like 30,000. Okay. So that 30,000, they received. I don't want to get into the weeds of the PPP, as you already know. It's a new program that had great intentions, but a lot of flaws. So they did a remedy of these flaws on June 5th. So there's whether you applied before June 5th or after June 5th. So for simplicity of this example, I'm going to say that they applied and received their loan after June 5th. So they have, they can use this to cover payroll for 8 weeks or up to 24 weeks in the sense that they can spread it out, okay? And then they can use it also to pay for some rent and utilities. So basically they received 30,000. And with that, now they have enough cash in their bank account to carry them through until things start picking up again. The reason I'm showing this is that if you don't have any of these numbers, you are going to be in trouble. You need 30,000, 35,000 to float to get yourself through this. It's a lot of money. You can't don't use your credit card. It's a terrible way to deal with this. I know that for some instances, that's all you have. I understand that not everyone has money in the bank account, you know, in their savings, like this person to put in. I understand that not everyone applied for the EIDL and not everyone got it. This is just an example to show you why it's important to have cash flow. So if you haven't applied for the PPP yet, I want you to know that you have till what is it, 25th? I think you have till today to apply, as lenders need to get approval from the SBA before June 30th. So it's something for you to think about. You can email me after this session and we can look at your situation. But the reality is you want to do a financial projection so you know what you're getting yourself into with reopening and having less income for a few months or a few weeks, hopefully just a few weeks, so that you can float to the place where you start making money again. You can see that in the monthly, I'm losing money January, February, March, which is normal because it's winter. But then I'm closed and I'm losing money because I have no income. April, May, no money. Then things are picking up a little bit in June, but thank God I got the EIDL, because otherwise I would have a lot more of a loss here. And I still have losses in July and August because people are a little skittish about coming back, still in September. But then finally, as things get better, people are going out again, and it's October, November, December. Now people are going out for social events and office luncheons and whatnot, and things are doing a lot better. And I'm putting money in a bank account so that by now I have enough money to float until the spring. That is one example of one business in a very particular industry, and every case, and I'm saying this, every case is unique. Your business is unique, your location is unique, your industry is unique, and for that reason, it's important that you don't rely on something you might find on the internet, like a boutique cash flow. I've seen all kinds of things where I'm like, I'll tell the client, I'm like, do you believe these numbers that you just put in here? They're like, no. I'm like, okay, so then don't put them in there. You have to put numbers that are real. You have to put numbers that are true or closest to your ability. So if you don't have bookkeeping, so you don't have that kind of data, you still need to give something to your for your taxes. So you can use that number divided by 12, make it an average, so that you can at least have some numbers to plug in. Sometimes it's a lot of people don't have sound, how would I say, not only bookkeeping, but money management. They mix everything up. It's the sole proprietor's business is often their identity, so they don't realize that if they do groceries out of their business account, that's a draw. It's an owner compensation draw, but it makes things very complicated for your accountant at the end of the year. So the cleaner you are about which hat you're wearing when you're spending money, the better it'll be in the end, both for your taxes and for you. Would you like to create a spreadsheet like this? So looking here, do we have any questions? We don't have any questions. This is a good time to ask a question because I don't mind going into what would be called the minutia of your, the differences between one business and another and the different subtleties that come from one type of industry or one type of business and another. So make sure you go into that Q&A, put in your little question, and I'd be happy to answer any question you may have.
So Miriam, if I can just ask you one question that you mentioned that the PPP program is still open. Can you just talk about that a little bit? You say,
yes.
When did you say the deadline was?
Sure, I don't mind talking about that. The Paycheck Protection Program, PPP, is open till June 30th. There will not be another round of PPP loan as far as I'm aware, okay? They are, the regulations now with the forgiveness of the PPP are much better than they were before June 5th. So I would encourage anyone who have not already applied to apply. There are lenders, your local lender might, your personal lender might participate. There are also other lenders that you don't need to be their client to participate. I'm thinking Pursuit Lending, which is a statewide organization, so you can apply to them. But the reality is you have to apply today for your application to be approved and all straightened up with the SBA by June 30th. So June 30th is the deadline, not for the application, but for the SBA to say yes. So you have to give them a week.
I see. So you need to get your application in today, or at least reach out to your banker, make sure that they know that you're interested in the loan and that you want to apply. And then by June 30th, the SBA has to have your application to see whether or not they'll approve it.
Correct. All right, I see here a lot of questions. Great. Let's go back to cash flow. Hey, I love PPP. It's a great program, but this was not the focus of this. So I'm going to steer back the conversation to the cash flow. So do you have any advice on cash flow management or financials if I am starting a business? Yes. There are a couple things you can do. Don't do it alone. Okay, it's really hard to sit down and say, I'm going to do projections today if you've never done it. You can get help from a business advisor, from the SBDC or elsewhere. You can get help from your accountant, although right now they're super busy with taxes, having been extended to July 15. So you do put numbers, you guess some numbers, and you say, well, these are not real numbers. But the reality is you're better off putting numbers that are not exactly correct than not having any numbers whatsoever. So for example, if in this instance I would have made projection, I'm like, well, I don't know how much the rent is going to be. I'm going to put 3,500. Well, if the reality is that you put 3,500 and then when you signed the lease was 4,000, you were 500 off. Okay. But you were not 4,000 off, meaning that you didn't plan for no rent, you planned for rent. So you make projections to the best of your estimation. And then when real numbers start coming in, let's say you were estimating for in this instance, let's say 2,000 for taxes. I mean, excuse me, for insurance. But then when you got the quote, it was 3,000. Well, then you make these adjustments. So it's really important to have that kind of, how would I say, fluidity. Okay, it's never etched in stone. Projections, the minute you're done with your projections, they're obsolete. Meaning that the next day you're spending money that you didn't account for, or that, you know, so you have to constantly sort of make sure that it's a work in progress, so to speak. And it's the way I look at it, it's like if you were to go on a trip, right? You go on a trip, the first thing you're going to do is, can I afford this trip? You plan flight or car rental or driving there, hotels, meals. You do all this math and some entertainment, you know, visiting things and such. You do a little math to figure out what will be the cost for the week. Well, most people, not most, I'm saying a lot of people and too many people start a business without even doing that very, very basic math. They go on vacation, they plan their budget, but they start a business where they're going to put their life savings and they don't do a budget. So you're better off doing a budget that's not completely 100% perfect than not doing a budget at all. So when you have your projections like this, so now I have a projection where all my actuals, if you look at the screen again, are January through May, because now we're in June. I didn't get my bookkeeper's info yet, and these were projections I made. So when I'll have my bookkeeper give me the report, I go back to June and I enter the real numbers here. Okay, so I entered the real number of how much I spent in marketing. I entered the real numbers of how much I spent for office supplies. I entered the real number of how much I spent for my travel expense or utilities. Every time I get a new bill, I put them in here. So what you do is, if you make projections based on 3, 4, usually 5, 6 months, I say it takes a year to really get a budget pat down. But after a few months to a couple of quarters, you get a good idea of what your expenses are looking to be. So if, for example, I thought my office supplies would be 50, but every month there's something or another. I'm a startup, so I need new software, I need this and that. And all of a sudden I'm realizing that it's more like 75 monthly. Then I make a change in my projections and I say, okay, well, it was 75 throughout. So I'm going to change it to 75. And now I have a more accurate number for my projection. And if it goes down, it's the same thing. You projected 75 and it turns out you're just spending 35. You put 35 and then your numbers reflect the reality. So that you constantly adjust like that. You basically add, the numbers as they come in and make adjustments accordingly. Noel, I'm not sure I understand your question. With the pro forma in place, how do we enter the actual monthly sales and expenses? Well, I hope I just did answer. Like I said, these were projected. So basically, for the simplicity of this presentation, I didn't want to spend too much time entering data, so it's already pre-entered with my Food Master. But the reality is, if I go back to my Food Master and realize I thought I'd get 50 patrons per day in June, and really what I got were 30 or 10 or 75, then I make the adjustment here. okay? Or I just put the amount, I give my point of sale data, and at the end of June, I can put the real amount of how much food I sold and how much alcohol and beverage I sold. So it's not too difficult. I mean, people get intimidated by the numbers because I think that it's hard to get intimate with numbers. You either like numbers or you don't. I happen to like numbers. But if you don't like numbers, I want you to look at numbers as your friend. Your new friends that you need to figure out. So it's basically like, okay, so what am I going to do with this data? Well, what you can do with this data and say, okay, so it looks like I am going to be more creative. And, you know, June was just a start, but I need to be super creative in July when we enter phase 4. I need maybe to simplify my menu to avoid food waste, and also to expedite service because maybe I have, you know, only one sous chef instead of 2, or maybe, you know, I want to accommodate my outdoors dining experiences for my patrons, and that involves, believe it or not, 50 more steps per trip per table. So when you calculate that you have 15 tables, that's how many steps more in a shift your wait staff is going to do. So that's going to be a little slower. So you want to make sure that when you place an order, you get an order that you make 1 trip, not 2, back to the table, for example. So that's how you start making adjustments from your management style to your marketing to, you know, perhaps your menu, so that you can be more efficient. Your patrons can be served more quickly, and you can still, you know, have the numbers you need to make this work. So that's just how you can make changes with your business. So, you know, maybe you were spending $500 in marketing, but now people not going out or not reading as much print media because everybody or a lot of people were staying home. You have to be a little different in your marketing. So then you might be spending the same amount of money, but you're going to do it differently. Maybe it'll be on social media. Maybe it'll be offering buy one, get one free to new customers or to a certain day of the week. So you want to look at these numbers as a way to translate that into actions. So the focus thus far has been on cash flow. For a business that gets paid immediately for its product, and when the goods are purchased, okay, hold on a second, let me read this long question.
So there's a question here that someone asked about that most of the focus so far has been on cash flow in this presentation.
Yes.
But when can you allow when cash flow also functions sort of like a P&L? How do you suggest handling projections when you get paid on a net 30?
Okay, so if you're paid a net 30, for example, and this would not apply for this, obviously, for this business model, because you are getting paid when you're serving the food, right? So if you're getting paid a net 30, you basically have to move everything 1 month. So the sales in January arrive in February. The sales in February arrive in March. But and I didn't put this here, but usually there are 2 line items at the bottom that are above this, which include inventory, because your inventory costs are, of course, your food, but you know very well that you have to buy, you know, especially let's say for takeout. Takeout was huge, you know, in June in May for those who stayed open for restaurants. So you have to buy a bunch of takeout plates and containers and bags and napkins and condiments and all kinds of stuff that you normally didn't have to spend money on because that was not a thing you did. Well, that expense, let's say of $3,000, is not accounted here in your as a cost because you've already spent it. So when you have it, you have your food cost here, which in this instance does include your takeout stuff. But you already spent, in addition to the 36,090 for January for food. You also have, actually that should be like for June. So sorry, June. You're in June. Your food costs and takeout stuff were 3,150 for this particular month. But just last month in May in preparation, you spent $3,000 alone on all kinds of takeout stuff. Well, that has been spent already, and this accounts for the real cost in real time of your food expense and takeout expense, but you've already bought all the other stuff prior. So that goes into a different line item in the cash flow projections. And you're right, it should have been here, but I, for simplicity, did not put it here. But I'm gonna just add it quickly so you can see what I mean by that. And
while Miriam's doing that, I'd like to let everybody know that we had a few questions early on about whether or not this form will be available after the presentation. It will be. All of the presentations that we do are available on the Orange County IDA's website, which is ocnyida.com. So we'll have it in the webinar itself, but we'll also have the form up online later today.
All right, so I don't know if you're following me. So I have, usually what I do is I put a little formula here of you have your inventory uses. I'm taking it out of my cash flow because I've already accounted it as an expense above here. So I don't want to do this again. I've already accounted for food and beverage once, so I don't want to do it twice. So I basically, sorry, this should be minus, and this should be plus. So you've already have received a line item with your expenses, so you don't want to do it twice. So this is your official inventory use that you used at the top, right? So I'm adding that back into my cash flow. But I'm taking out the true inventory purchase, which is basically what it costs me to use this much. So there was food waste. I always add a little bit for food waste. So in this instance, I'm adding this formula, but as I was explaining, in May, before I reopened, I spent another $3,000 before I had any expenses, right? I added $3,000 before I had any income of whatsoever. I added $3,000 of inventory to my kitchen so that I can open up and have all these different containers. So basically, I have the cost of my food is above, that's my true cost, but the cost of my inventory purchase is a little higher usually. So for example, if I need, if I get every quarter I do, let's say, an alcohol purchase to replenish my bar, well, that might be $1,000. So that's $1,000 that I have to spend up here, but I won't really account for the real cost per customer until it's being used. So that's why the inventory purchase is a true line of your true inventory costs, whereas the inventory use or the cost of goods that you used is your real-time consumption of this inventory. Does that make any sense? So at the end of the year, you always have a little more. If you do the inventory of your food and alcohol in your restaurant, you're going to have a few $1,000s more than you actually used, and that's normal. I hope that answered that question. If not, please raise your hand again. But so every industry is different. Every industry has it's in every business, like I was saying, is unique. So if you use a template that is already pre-made, it's just you're wasting your time. And by that, but pre-made, a template that was done by some industry specialist. It's going to give you some guidelines. You can say, oh, I'll use this to get some projections, and it's usually good for startups, but it's really not good for an existing business. You're much better off using your numbers or the numbers that are most closest to you.
Okay,
So,
Miriam, I think we don't have any other questions. I really appreciate the detail and hands-on presentation that you provided us today. As you mentioned, you're available at the SVDC offices in Goshen and in New Windsor, right? Can you give out your phone number?
I will put the slide back up of the office, and that would be the best way to get to get to me. But also, I will get you the list of the registrants after, and I will email you a couple of things. One is from our office manager, you'll get a survey, which really takes like 10 seconds. Honestly, it's like 4 questions. Which is really important for our sponsors. The SBA requires that we sort of give them an overview of how well we did when we did the training, and be honest. If you liked it, you say yes. If you didn't, say no. But replying is really super important, so please do. And I'll also send you this spreadsheet. I'll send you the sample cash flow without anything in it. And I'll send you a more elaborate spreadsheet that I'm warning, I created it and all the ins and outs. You play with it. Formulas don't work, don't come back to me. I'll more than happy sit down with you and help you with your projections and try to fix the spreadsheet. It's just easier that way, and a better use of my time and expertise to help you do the spreadsheet as opposed to fix your spreadsheet. So do it with you, right, so that you know that everything works for your specific business. So you'll have both my email, my contact info, those spreadsheets, and then we'll go from there. If you need help, okay. We're here to help. I cover Orange County, and I have an office in Goshen at the Orange County Chamber of Commerce, and I have an office in New Windsor at the Empire State Development offices. But obviously right now everybody's working remotely, so it doesn't matter where you are. We can do a phone, Zoom, whatever you need.
Okay, thank you, Miriam. As I mentioned at the top of the session, we've been holding these webinars weekly for about the past 3 months. Due to the July 4th holiday, we're going to take next week off, but we'll return on July 11th with a session on phase 4 reopening, what's open, what's not, what all of that means for our economy. I know the governor announced yesterday that gyms won't be opening in phase 4, movie theaters won't be opening. So how that's going to affect our economy is going to be very interesting. We'll also discuss the recently announced federal Main Street loan program, which may have a significant effect on many of our local businesses. So we'll be sending out more information about that webinar next week. I'd like to thank Ann Bouchard once again for a great session today, and remind everyone again that it'll be posted on our website, www.ocnyida.com, later today, along with Miriam's spreadsheet. So thank you for joining us today, and enjoy your weekend and the holiday next week. And we look forward to talking to you again on July 11th. Thanks, everyone.
Thank you, everyone.